Now, anyone considering property as an investment strategy might look at alternatives like investing in Defence Force housing. To explain how the numbers work out, we have Jon Brocklehurst, who's the Chief Financial Officer of Defence Housing Australia, and he joins me in the studio. Jon, thanks for joining us.
Thank you very much indeed.
Now, people hear about it, and I've had people from your organisation on my show before, but yes. I think a lot of people aren't quite sure. So how does an investment in DHA work?
Yeah, so the way basically the whole thing works for DHA is we provide housing for members of the Defence Force, as you're probably aware.
Yeah.
And we go and source the properties to do that. And then through our property investment programme, we offer those properties to investors who may want to buy one of our properties on a long-term lease back to us. So in essence, we sell it to you as the investor.
Yeah.
It's got a long-term lease on it, often 12 years or more, that in essence gives us access to that property for that period of time.
Yeah.
And from the investor point of view, it gives them a lot of security in terms of knowing that they're going to get a return on that property.
Okay, well, one of the reasons I was happy to have you on the show because you're a CFO and I want to talk numbers. Okay.
Please, so, you go for it.
So what kind of average yield should an investor expect?
Yeah, so, well, everything's done on market basis. So
the more expensive, probably the lesser return?
Well, yes, it often does work that way in the property markets, but we get annual rental valuations carried out by independent valuers, right. And so you do get a market rental yield. That, as we know, that can vary between different markets, and it can vary depending on the type of property, whether it's apartment or a house or whatever.
But are we talking 4 or 5%?
Gross yields typically in the fives, but in some markets like Darwin, you might be looking a little bit more than that.
Yeah, because capital gains there as well, isn't it?
Well, the Darwin market in particular has been extremely strong for quite a while.
I've always said when people ask me, I say, well, look, if you're going to do that, you want to probably know two things. You want to make sure that the Army or the Navy or the Air Force is not going to move away, because that could affect your long-term investment.
Well, possibly, although we're providing houses in large cities primarily. So we do have some properties in remote locations, but by and large, they're all in capital cities and regional locations. But for the investor's point of view, they don't need to worry about whether defence moves away or not, or the defence member moves in and out of the house or not, because we guarantee that we will pay rent every week of the year for the whole life of that lease. So the whole tenancy issue and the vacancy issue is managed completely by DHA.
Yeah, and 12 years is usually a good period of time to hold investment. But what if someone decided they wanted to get out after 8 years? Is that difficult?
Yeah, we do find some people who would actually. We don't find many people who want to do that. But obviously, in some circumstances, people have reasons why they need to sell.
Someone could actually die, and their estate could want to get rid of it.
Exactly right. And there is a market for DHA properties with the lease, because the lease, even though there might be 4 or 5 years left on the lease or whatever, is still a very attractive option for someone to buy in the market. But you mentioned the long-term lease, and what we actually find is that in terms of investors who are interested in buying into DHA, we are finding quite a lot of interest from the self-managed super fund part of the sector.
So is this a new thing that you're starting to notice, that the self-managed super fund?
I think it's been there for a while, but it's starting to increase a little bit.
And more advertising around that space.
Yeah, and the time horizons around the DHA lease often works very nicely for people who have the same sort of time horizon around their superannuation requirements.
Yeah, and it seems to me, I know on my radio show, the question we've got around this kind of thing really escalated when the tax office basically allowed people to do more renovations on property. I think a lot of self-managed super fund people saw it as an opportunity to actually get an asset that they can actually enhance.
Yeah, no doubt. I think a lot of investors have a variety of different motivations for wanting to buy a DHA property.
All right, so walk us through how someone goes about finding a DHA property. As you said, there's a whole heap around the country.
There is. And in fact, actually, we've got 18,000 properties around the country. About 12,000 of those are actually owned by private investors right now and leased back to us.
So there's 6,000 potentials out there?
Well, not quite 6,000, but there are. We usually sell around about 700 or 800 a year, so it's a fairly good quantity. But how do you go about it if you're interested? The first thing to do would be to register your interest through the DHA website, which is dha.gov.au.
Yeah.
And so you register your details in there, and then one of our sales consultants will get in contact with you and talk through what options there might be, what locations you might be interested in, and so on. So once you've done that and got your finances approved, then and you're interested in buying, we then go through. We have a weekly sales process. So each week we'll put up a number of properties, They're usually on the website for a week or so prior to a ballot process in which the properties are allocated to buyers. So before that ballot process occurs, you have a good opportunity to look at what properties are available. You know the price of the properties, because we do sell at a price, and you know what rent you're going to be getting as well. So the buyers have a good opportunity, the investor has a good opportunity to do a bit of due diligence on the property.
Okay, and the regions, how many regions will we find these properties?
If you think of where the defences we are, so...
Could be 20, 30, 40 different regions.
Every capital city, and many regional centres like Townsville and Wagga and so on. So,
okay, let me punch a few quick questions before we go. Who manages the property?
We manage the property.
Does it cost us anything to make it happen?
Yes, there is a management fee that DHA charges. That ranges between 13 and 16.5%. Now that covers quite a lot of aspects. So it covers the full management of the property by us, all repairs and maintenance on the property. You don't get any vacancy, and we really. And
it comes off the rent, the 13%.
Yeah, we charge it as a percentage of the rent.
Okay, who sets the rent?
Independent valuers. So every year your rent gets reset back to market, and we get independent valuers to do that. But I should say that there is a floor to the rent that we guarantee that it won't drop below the starting rent on the property. And
I guess if the Australian Defence Force actually move the facility and you're mid-lease, you still got to keep paying right to the end of the lease.
We have an obligation to pay all the way through.
So it must be an important issue, governing decisions to move a base.
It does, but to be frank about it, Defence, whilst they might move units around the country, they generally have a base, and they keep a base. And
they're there for a very important strategic reason, aren't they?
Exactly right.
Okay, and do you guys provide finance, or do people bring their own finance?
No, we don't provide finance, so investors have the opportunity to seek out their own financial arrangements. But I would say that all major financial institutions really know the DHA product well. And
finally, the price range?
Ranges. We've got properties from $300,000 right the way through to $1 million or more.
Oh, really?
So the average price is probably around about $500,000.
I guess the majors and the colonels got to live in nice properties, haven't they?
Yeah, and of course in locations here in Sydney, for example, and Darwin, we mentioned before, properties are more expensive. And in fact, we have a couple of significant developments here in Sydney. One at Crimson Hill in the Lane Cove National Park, which we're actually selling at the moment, and that's selling really well. And we also have one on the Parramatta River down at Ermington, which isn't available for sale and leaseback now, but will be very shortly, and that'll be quite a nice area to get into.
All right, John, thanks for joining us on the program.
Thank you very much.
After the break, the internet continues to revolutionise industries, and none more so than the hotel game. Next, we'll go direct to London and see what lessons we can learn from the success of Mr. and Mrs. Smith.